Hi, my name is Janlyn Hanna, and I am the Public Affairs and Outreach Coordinator for the Oklahoma Farm Service Agency. This presentation focuses on record requirements for participation in FSA programs. So what's so special about keeping records? Well, for programs through Farm Service Agency, it could be the difference between being eligible for a program or not. Without completed applications, supporting documentation, and records on file, loans cannot not be disbursed and application payments cannot be released. FSA programs, most notably disaster programs, are often released a year or more after a disaster. It can be most difficult to remember your taxes, purchases, sales, and livestock numbers a year later. Keeping running records can save a lot of time and frustration in the long run. Programs may also have short sign-up times. If you have to dig through old documents and produce records, you might miss out on your chance to participate prior to the deadline. Finally, we all know circumstances can change. Bankruptcies, paying off debts, and loss of income can all affect your eligibility to participate in FSA programs. With regard to applying for loans through FSA, whether it's direct, guaranteed, ownership, or an operating loan, certain documents are required. In order to obtain credit, all applicants must produce a statement of cash flows. FSA personnel can assist with this process, but it must be completed before your application can be submitted. 3 years of tax records, including any Schedule Fs, must be reviewed to check your ability to pay back any monies loaned. Several documents may be necessary to meet eligibility requirements. The CCC 941 form is required for participation in most FSA programs. This form acts as a signed producer certification of annual average adjusted gross income being less than $900,000. While that number sounds silly to some, selling a large business or off-the-farm employment are factors in this income certification. Although a certification, this income is verified by the Internal Revenue Service. The average is taken by using the 3 tax years prior to the current year minus the prior year. So, in this example, if we were looking at 2017 payments, the tax years reviewed would be 2015, 2014, and 2013. That's because we're going to skip the current year of 2017 as well as the prior year of 2016. If audited or questioned by the IRS, producers will be asked to provide documentation or tax records showing they were under payment limitations for the average of those 3 years. If you question your eligibility, it's best to check your records or consult your accountant prior to receiving benefits. If found ineligible, producers may have to pay back benefits plus interest. Other eligibility records that may be required are all active leases and deeds must be provided. Legal entity documentation such as LLC paperwork and partnership paperwork may be required. Signature authority, if applicable, should be provided as well. Your banking information for direct deposit purposes will be asked for, and any assignments you need taken should be provided. If you plan to file for a waiver, we should have this information prepared before coming into the office. Such waivers as beginning, limited resource, and targeted underserved producers are eligible to have fees and 50% of their premium for NAP purposes waived, just as an example. Acreage reports are required to participate with FSA. For this, producers will need to provide their farm and field locations, planting dates, crop types, and crop uses. To remember these items quickly and easily, use of contemporaneous records, or pocket diary, or pocket calendar can be most helpful. Over the past few years, drought has impacted the southern plains. FSA's livestock disaster programs have been very active due to this. Before an application can be considered complete, producers must submit all grazing leases, any contract grower agreements, and keep running totals of livestock deaths, births, purchases, and sales. It is important to get an accurate head count for this application. Like all FSA programs, any application is up for potential review. It's much simpler to have these documents collected sooner rather than later if you're being audited. Conservation programs such as the Conservation Reserve Program and the Emergency Conservation Program, or ECP, provide assistance to producers looking to improve or repair their agricultural lands. To participate and receive funds, customers should provide all materials that were purchased, including receipts, for labor, all time used for labor, as well as dates and receipts. If equipment was rented, all rental receipts and time equipment was used. And through NRCS, the Natural Resource Conservation Service, a Conservation Plan of Operation, or CPO, must be provided. Hay and grazing records as well may be asked for participation in the Conservation Reserve Program. Price support programs provide assistance through a variety of programs like the Milk Protection Program and the Marketing Assistance Loans. These are used when commodity prices fall. To participate in these programs, the required documentation should be submitted as applicable. These could be warehouse receipts, crop insurance data, weight tickets, scale tickets, and sales receipts. Finally, disaster assistance is available through the Farm Service Agency under programs such as the Non-Insured Crop Disaster Assistance Program, more commonly known as NAP. For NAP, FSA pays on low crop yields, meaning production losses. To be eligible, participants must provide any weight tickets, their yields or production evidence, and contemporaneous records showing harvest dates and other information. This has been a brief overview of records for FSA. For more information on record requirements for the Farm Service Agency, programs and loans, please explore our program snapshots, fact sheets, AGI, and public FSA site pages for the most accurate and up-to-date information. Thank you.